I remember buying my first car and thinking I just need to leave the dealership with a good monthly payment. Wrong. I ended up overpaying by thousands over the course of the loan. Buying or leasing a car is one of the biggest financial decisions you'll make. But know this, dealerships are going to do their best to squeeze every single penny out of that deal. They're going to tell you that the final cost doesn't matter. They're going to talk to you in circles about financing, and they're going to try to use all the tactics they got to try to manipulate you. I wish someone had told me exactly what numbers matter, how dealerships manipulate you, and how to get the best deal possible, whether you're buying or leasing. By the end of this video, you're going to have the confidence to walk into the dealership and avoid their tricks and get the best deal possible. So what numbers actually matter? When it comes to getting a car, most people focus on the monthly payment, and that's exactly what dealerships want you to do. But the truth is, the monthly payment is just the tip of the iceberg. There's 5 numbers that actually matter, and the first one is the total purchase price. This is the total cost of the car before any leasing or financing terms are applied. It's going to directly impact your loan amount, your interest paid, and your resale value. Because so many buyers are focused on the monthly payment, it allows dealerships to inflate this number. But you need to always negotiate this number, even if you're leasing. This number affects every number moving forward. The second number that matters is the money factor. This is the APR equivalent for leases, and it is almost always marked up by dealers, because no one ever asks for this number. Always ask for the money factor and then multiply it by 2,400, and that's your APR. Then take that number and compare it to market rates and start negotiating. Most dealers aren't going to disclose this number up front. You have to ask for it. And if they don't disclose it, leave. Just leave the dealership and go somewhere else, because they're already showing you that they're not willing to be transparent. The third number that matters is the residual value. This is the estimated worth of your car at the end of the lease. A higher residual value means less depreciation, which means a lower monthly payment. If a car's residual value is too low, your monthly payments are going to be higher. And in this case, leasing is probably not the option to go with. Something you might want to consider is, before you even start car shopping, look for cars that have a strong resale value. If you look for cars with strong resale value, that's going to help your monthly payment as well. And I'll talk more about that a little later on. The fourth number that matters and that you need to pay attention to are fees and add-ons. Watch out for documentation fees, acquisition fees, disposition fees, and for dealer add-ons like fabric protection or wheel locks. Always ask for a complete breakdown of the costs and challenge any unnecessary fees. Many fees are negotiable or outright avoidable. You can ask them to remove unnecessary dealer installed add-ons. I remember when I purchased my last car, they had the rubber mats all over the car, like rubber protected mats on the floors. And I loved them, but they were ridiculously overpriced. And I told them to remove that fee. And of course, they told me they couldn't because that's how the manufacturer sent the car. That is not true. That is why it's called a dealer add-on, because the dealer put that on the car. So I told them, no, take it out the car, put it in another car, add it to the price of that car. I don't care what you do, but take that price off of my car. They took off the price and I ended up keeping the rubber mats. And the fifth number that matters is the depreciation rate. You already know, you've heard a million times, cars lose their value the minute they're driven off the lot. New cars depreciate 20 to 30% in the first year. If you're not going to lease a brand new car, the best option is to buy a slightly used car. So 2 to 3 years old. It's the best balance. You save thousands, you haven't hit the steepest depreciation, and the car is still reliable for a few more years, and it'll come with warranty. So it's like the best little package if you're not going to lease a brand new car. So let's get into why the final price matters, even if you're leasing. Dealers will tell you that the final price doesn't matter because you're not buying the car. That's a lie. It's a lie. That number affects every single number, whether you're buying or not, because the total cost of the car determines your monthly payment. The higher the purchase price, the higher the monthly payment. That's just what it is. But besides that, if your situation changes and you end up needing to purchase this car and you didn't negotiate the final price, now you're stuck buying this car at an inflated price. And you can't negotiate it at this point. That's done. The second reason is when you lease a car, you're paying for the depreciation of that car. So this number matters, okay? This number will affect your monthly payment. Ultimately, just always negotiate a lower purchasing price. Do not fall for their trick that it doesn't matter if you're not buying the car, because no matter what route you take, this number will affect what you pay. Now, let's talk about why I would never suggest buying a brand new car. One, because of depreciation. A new car loses 10 to 20% the minute you drive off the lot. It loses 20 to 30% in the first year, like I already mentioned, and the car will depreciate 60% in the first 5 years. So that brings me to number 2, which is the financing disadvantage. Even with a good interest rate, you are paying for a depreciating asset, meaning that you're going to owe more than what the car is worth for a significant portion of the loan. In my opinion, the better alternatives is, as I mentioned, buying a car that's 2 to 3 years old, certified pre-owned. You're going to save thousands and it's still going to give you a reliable car with some warranty coverage. Now, if you're talking about leasing a brand new car, that's a different conversation. If you lease strategically, it could actually be better than buying a car ever. Let's talk about smart leasing and bad leasing with some real numbers. If you're leasing a car for 3 years and you do not negotiate, the car is $33,000, the residual value is $18,000. Your lease payments will be $400 a month. If you negotiate the purchase price down to $30,000, the residual value remains at $18,000 and the lease payment will now be $350 a month. So as you see, even if you're leasing, negotiating the final price matters, because in this case, you'll save $50 a month over the course of 3 years. That'll be about $1,800. Now, let's say you go in there super aggressive and you have the list of all the numbers that really matter, and you say, I'm going to negotiate that total purchase price and I'm going to negotiate the money factor. This is what it would look like. You have that $33,000 car, but you negotiated it for $30,000. The residual value, as you know, as I mentioned, doesn't change. So it's $18,000. You negotiated the money factor from 6% to 3%. Your monthly payment, instead of being around $450, is now around $350. What does that mean? That you're saving about $100 a month. And in the course of 3 years, that's $3,600 that you get to keep in your pocket. And if you end up deciding, I love this car, if your situation changes and you need to buy the car for some reason, you're on the better side of things. But if you say leasing is not for me, I'm going to go the route of buying a car, but I'm going to do the smart thing. I'm not going to buy a brand new car. I'm going to get a gently used car. Here's how to get the best deal and avoid a lemon. A friend of mine ignored these steps and ended up with a flood damaged car. Don't do that. Just follow the steps. The first one is check the car's history. Use services like Carfax and AutoCheck to see the car's accident history and previous ownership. And if you come across anything with salvage titles or undisclosed damages, walk away. Leave that car where it's at and look for something else. The second thing to do is get a pre-purchase inspection. Always have a mechanic that you trust inspect the car. And if a seller refuses to do this, it's a red flag. Walk away, find another car, keep it moving. Third is negotiate the price. I think this is the whole point of the video. Negotiate the price is like priority. Even though it's a used car, you can negotiate the price. Of course, they're going to inflate the price. Why wouldn't they try to get the most that they can? It doesn't matter if it's new or used. Negotiate the price. Use Kelley Blue Book, use Edmunds.com to find a fair market price and start low. Expect a counter offer and just do your thing. Negotiate, go back and forth. Get the best number that you can get. Number 4, I beg of you, avoid all buy here, pay here places. They have crazy high interest rates. And I understand some people have really bad credit and don't know of any alternatives. Listen, try a credit union, wait a couple months and increase your credit score. It is a lot easier to increase your credit score in a couple months than to buy a car at these places and be stuck with this interest rate that is ridiculous. You will lose thousands of dollars at these places for these cars that usually aren't even close to worth it. And number 5, one that people don't even really think about is looking at total ownership costs. This means look at the insurance rates, look at the maintenance costs, look at the fuel efficiency. Just because the car is cheaper doesn't mean it's going to be cheaper in the long run. If insurance rates are kind of crazy for this car or maintenance is on the higher side, you could end up paying more in fees than in the actual cost of the car. To give you an example, one of my friends bought a really nice car, great price, and the light went out. In this specific car, you could not just change the bulb. You had to change the whole unit. The price for a light unit on this car was $1,300 for one unit, for one light. They had to end up selling the car because trying to keep up with the maintenance costs was just outrageous. So that is something to truly consider. Now, let's talk about trade-ins. Should you do it? This is a tricky one, and you really have to know how to do a trade-in because dealerships will try to give you a lowball offer. Something that I did with a previous car of mine was not to automatically sell it to the car dealership that I was getting my new car in. And keep in mind, you can still do this with a leased car. You can trade in a leased car. You don't have to just turn in your leased car. But I'll get into that in another video. For right now, let's just talk about trade-ins that you own the car. Do not accept the dealer's first offer. Get multiple quotes. And actually, my suggestion would be get these quotes and walk into your dealer with, well, I have this offer here and this offer here, and I'm going to take the best offer. So what can you do? But yeah, the first thing to do is get multiple offers. Go to CarMax, go to Carvana, go to local dealerships, and you can even go to online car dealers. I got multiple offers for my car just from putting it in kellysbluebook.com. And I was able to use this as leverage. The second option is if you have time, sell it privately. It'll take a little bit more time, but you can usually get thousands more than you will in a trade-in. On places like Craigslist, Facebook Marketplace can actually really get you a much better offer. The third option is negotiating your trade-in separately. This is something I also did. When I took my trade-in, I had all the quotes that other people were offering me, but I also wouldn't talk about it until the end of my deal of the new car. I wanted to finalize that purchase price before I talked about the purchase price for this, because I wasn't going to have them lump it in, mix numbers up, and try to pull the wool over my eyes. Because what'll happen is that they'll try to make the trade-in look like a discount on your new car when it's actually just lowering the value of the trade-in itself. So if you're going to do that, wait, do one deal and do the next. Tell them, let's finish this and then we can talk about that. We're not going to do it together. Number 4, I kind of already touched on. Use your trade-in as leverage, right? Lock in your new car price and then use those multiple offers that you got to negotiate with the dealer and let them know you got a better offer somewhere else and you can take your trade-in over there. Number 5 is you need to know your car's market value, no matter who you sell it to. Use Kelley Blue Book and Edmunds to determine the actual trade-in value of your car before going to any dealership or any private sale or anything. This is just going to allow you to have the upper hand. It won't let any dealership, any buyer try to undercut you. And the last one is know how much you owe on the car. If you owe more than what the car is worth, then your best bet is to sell it privately because you can probably get more than what it's worth, or keep the car for a little longer, pay it down a little bit so you don't have to roll over that old debt into a new loan. And listen, if a dealer refuses to work with you on a trade-in, don't sell it to them. Sell it to another dealership who will work with you, or sell it privately and use that money as a down payment. You don't have to work with the people that you're buying your car from. You also might not want to buy your car there, but you don't have to stick with anyone. Go somewhere else. Now, once you've made your deal, you're either leasing your car, buying your car, there are pitfalls to avoid that dealerships will try to sneak in there at the end. They're unrelenting. They keep going until the very end, until that last signature. I had a dealership try to sell me paint protection for $800. This is something that sells for like 50 bucks if you put it on yourself. And I'm sure it's cheaper if you get someone independently that details cars. They really tried to sell it to me for 800 bucks. Don't fall for these, okay? The first pitfall to avoid, the one we've been talking about, just focusing on the monthly payment. If you just focus on the monthly payment, you're going to get hidden fees, you're going to get a higher interest rate, and financially, they're just going to trap you. Also, never reveal your target monthly payment amount. Because I promise you, even if you can get it to be lower, once you reveal it, it's never going to happen. You're never going to get lower than that. The second one we also touched on is rolling your negative equity into your new car loan. If you owe money on your trade-in, don't fall for this. We'll be happy to roll it into your new loan. Like, you don't have to worry about it. They've just trapped you into more debt with them. Always keep the trade-in process and the car purchasing process separate. Always. Number 3 is marking up interest rates. Dealerships make their money by offering higher interest rates than the banks. So always go in with a pre-approved loan from a credit union or a bank. That way, you know what you're working with. Like, you don't have to loan the money from that dealer, but they will prefer that you do. So because you have these other offers, they're either going to match that or you just get the money from the bank. The fourth thing to avoid is extended warranties and useless add-ons. From paint protection, fabric protection, to nitrogen-filled tires. All these things are completely unnecessary and just a way for the dealership to make money. Avoid all these add-ons, and if you need extra warranty, go through your insurance or go through a third party. It will be cheaper. And the last one is gap insurance from the dealership. I did this when I bought my first car. Always shop for gap separately, if at all. You can usually get a better price through your insurance provider. And just so you know, some auto loans provide gap for free. It's a protection that is already included in your loan. So make sure you look at your contract. So now that you know how dealerships operate, let's talk about how you win at negotiating. Always research the marketplace. Dealers expect uninformed buyers. Don't be one. Second, get pre-approved for financing first. Walk in with a loan offer from a bank or a credit union, so you're not forced to use the dealer's marked up rates. Number 3, do the math at home and then negotiate in person. This is especially important if you're not used to negotiating. Dealerships love to put you in a high pressure environment. And if you're not used to pushing back, it can get real easy to get overwhelmed. Do your numbers at home ahead of time. Know your budget and your ideal terms. Number 4, avoid emotional buying. Dealers will play on your emotions and push this dream car scenario. Always stick to the numbers and avoid impulse buys, okay? For me, when I go into a dealership, I always go in thinking, my dream car is me getting the car that I said I was going to get at the price that I said I was going to get it at. Okay, stick to the numbers. And number 5, this is the most important. This is how you will get the best deal every time. Okay, is you have to be willing to walk away. The best deals come when you show that you're not desperate. Listen, if the deal isn't right, leave. There's always more cars. There's always the same cars at another dealership that will work with you. At the end of the day, they're really the ones in a desperate spot, okay? They want to sell a car. And if it doesn't work, it doesn't matter how long you've been there, 3-4 hours, leave. Just leave. But I promise you that most dealerships, you can wear them down. They think that they can wear you down, and they can, and they will. But you can also wear them down because they want to make a sale more than they lead on. Now, you need to go in there knowing how to read a contract. Okay. Before signing any paperwork, look for these hidden fees. Dealership prep fees. These are often unnecessary and should be removed. Dealerships will claim that this covers the cost for preparing the car to sell, but this is a standard business expense. They sell cars, and this is the cost of it. Get it taken off. Another one is market adjustment fees. This is just a way for dealers to charge more for high demand cars. These are fees usually added to cars that are low in supply but high in demand, and they're usually negotiable. I've never experienced this personally, but I've seen people who have negotiated these down or have taken them completely off. Add-ons you didn't agree to. When I tell you look at every number in your contract, dealerships will try to sneak in extra warranties, extra add-ons, extra protections without ever discussing them with you, without ever letting you know. Look at every number. Okay. Don't take it for granted that they say they're going to take it off. The next one is interest rate markups. Verify that the loan rate matches what you were approved elsewhere. Some dealers will increase the APR for profits, even if you qualify for a lower rate. Like, you qualify for a lower rate. That doesn't mean that's what they have to give you. So this is something you need to pay attention to. Number 5 is doc fees. And while this is state regulated, documentation fees can be excessive. You can ask the dealership to reduce them or remove them if they seem inflated. And number 6 is disposition fees for leasing. If you're leasing, check if the disposition fee is charged at lease end for returning the vehicle. Some dealers waive this if you buy or lease another vehicle with them. Listen, at the end of the day, never sign a contract that you don't understand every line, every number. And if you don't understand something, don't feel silly. Don't feel like you don't want to get on their nerves. No, it's your money. They're making a sale. They should be happy to make a sale. But a dealership is a hostile environment. They make you feel like they're doing you a favor. Ask them everything you want to ask them. And if you don't understand them, ask them to explain it until you do. Now that you know everything you need to know to negotiate your deal, the next thing is, when do you buy a car to get the biggest bang for your buck? Here's when to buy a car: at the end of the month or at the end of the quarter. Salespeople have a quota to meet. So when they're getting close to that cutoff, they're going to make a better deal. And they're going to try to do it quickly so you don't walk out. Another time is the end of the model year. When new models arrive, it's obvious the old models are going to be discounted. And third is holiday sales events. Black Friday, Memorial Day, and year-end sales. Those are dates that will all have better deals. And the last one that a lot of people don't think about is January and February. These are really slow months for car dealerships. People have just gotten over a big holiday, which is Christmas, where they spend more money than they probably have all year. And so these are really slow periods where you can take advantage of getting a decent deal because of low demand. Finally, in the description below, I've left a PDF that provides some scripts that you can use with confidence. Listen, at the end of the day, you can't be fooled at this point. You've done the research, you know the tactics that dealerships are going to try to use, and you have the ultimate playbook to put you in control and not allow the dealerships to manipulate the conversations and pressure you into a bad deal. The key is to stay firm, direct, and not afraid to walk away. Instead of letting them use their tactics on you, now you use these tactics on them, and it's going to save you thousands. Now that you know how to outsmart dealerships and get the best deal on your next car, share this with someone else that could use it. See you in my next video.